All right, welcome back. Now, having discussed imbalance and a value gap with you, now we're going to move to internal and external range liquidity. Internal and external range. What does that mean? Let me show it to you. Now, when you look at this recent swing high and low, you mark it out, this high and then this low. Now, there is something here that is so plain to see. For this low to be formed, price will trace into a level, an area, then stop there, close above it, and then went up. Now, this retracement you see is called internal. Price formed a range. This was the previous range, this high, and then this low. Then we did this range, price will trace back. It's as if something expand, then contrast, then expand again. Now, it's all called higher high, higher low, right? Let me show it to you a more. This pull back. This is a range, right? High, low, then price pull back within the range, then expand higher to create a new high, then pull back again, and then, all right? Now, this pullback is to achieve something, which is price pullback, right? To tap into the internal range here, this range. Inside of it, internal range liquidity. Then price went higher to do what? To take out the external range, which is this old high liquidity. So that is all price does. Price either retrace to a point of internal liquidity, internal range, or expand to a new high or a new low. Now that's process of making a new high or a new low is called external. It's as if you live in your house, right? Then in the morning you go out to your place of work or your office or to see a friend. Then you come back inside again. When you are back into your house, you are internal, inside your house. When you go out, you are what? External. You are outside. So that is the same logic here, quite similar. So price will trace back to this range, pull back. Now the easiest style of trading is actually this, trading pullbacks like this. When price form a range, then price pull back to that same range for internal range liquidity, then price expand higher to create a new high. So price will trace towards this imbalance here. You see, price touch it multiple times, price never close above it. So price never close below it, price close above the imbalance, right? And then it went up again, then it retrace again, this new range, price retrace back to this same range again to do what? To touch this imbalance here. This is the imbalance, so clean, so smooth, and the price went up again to create a new high. Do you see now? So imbalance is internal. All imbalance are internal. They are always within a range. So price always tends to trace back to that internal level, which are the imbalance, so and then expand higher to create a new high. Is that clear? Let me show an example again. You see, This was the high, the low was around here. Price retraced, kept retracing to this level. So it reached this level, this area. Then price turned back. Now this is the high, the lows around here. All these retracements was for price to tap into internal liquidity, which is here, right? Then price went up, created a new high, broke this old high, this, and then create this high, right? Then again price retraced back again to do what? To tap into internal liquidity, which is this imbalance here, or fair value gap, FVG. So you see, then price then return back to the bullish trend. Again, price retrace back to internal. So price expand, then contrast, expand, then contrast, expand, then contrast, expand, then contrast. Price will go up, then pull back, then go up again to create a new high, then pull back again, then go up again for a buying setup or a bullish trend. For a bearish trend, price will break a low, make a new low, then pull back, then drop further again to make a new low, then pull back again, like that. That is our price move. All right. Now the easiest style of trading is trading these pullbacks, these swing pullbacks. These are called swing trading. So if you want to make money from the market, the easiest way to make money from the market is to focus on trading pullbacks. Once price expand to create a new high, wait for it to pull back to the internal range. Then you hit it, you take your entry. Once you sign up that okay, price is about to continue going higher again, then you buy like this. So it's so simple, so easy to do. You see it here again. It's the same everywhere across all asset classes you can ever think of. This happen again and again and again. Price will go up, create a new high, then retrace back to the inner range. Then price will continue again to go up again to create a new high. This is our price move. Once you can see it, it begins to make sense to you when you open your chart. So you begin to know how to trade and make money. Let me show you more example. So all we do in the market is tracking the movement of price. You see a low, a high, price will trace a little bit back to internal. This imbalance here, touch it, then went up again. You see here a low, a high, price will trace deeper to this imbalance level, and the price closed inside it, then went up again to create a new high. Again and again, you can see it here as well. So these are price move. Now the easiest style of trading is trading these pullbacks. Just focus on trading pullbacks like this. You see, price create a new high, then retreats back to this internal level. Then went up again to create a new high here. Then price retreats back again to this internal range. High, low, this is a range, your new trading range. So all price did was to retrace back within this range, high and low. So when it comes to trading, the easiest way to trade is like this. Just know your high and your low. Then wait for price to pull back within that range of high and low. And then wait for signs of bullishness. Then you hit it right there. you take your entry, and that is how you make money from trading. So see you in the next video.